Everybody, thank you for joining us. We're going to give this just one more moment to give everybody an opportunity to get into the meeting. So bear with us for just 1 minute and then we'll get started. Okay, guys, the beeping has stopped for the moment. If you want to go ahead.
Awesome. All right. Well, hello, everybody. Welcome. We've got this scheduled for an hour today, but we won't need it. This is meant to be a quick introduction to the loan store and some of our folks here. My name is Adam Wagner, and I'm joined today by Jeremy DeRosa and Philip Schulze. I'll let them introduce themselves during their segments. But to start, again, quick introduction to the loan store. Obviously, most of you have met or know of your account executives. Your AEs continue to be the absolute best source of any granularity or loan level questions or even deal structure. A lot of people don't really use the AEs in such a symbiotic fashion, which is to say, hey, I've got some deals here, I've got this deal, I know it works, I just can't figure it out. The AEs that we have, 20, 30, sometimes more years of experience doing just this. And you really need to use them as an accelerant in your business. That's what they're there for. We don't profess to be your one and only lender. We don't want to be your one and only lender. We want to be part of your top 2, top 3, maybe at most. And we have a wide breadth of products and options for you to make that decision pretty easy for you and your clients. I think a lot of LOs, especially, this morning, you look at some hotter than expected inflation. You got an equity sell off. You got bonds doing whatever bonds do. I don't know. If I was so smart, I'd be retired, right? But here we all are on a call about mortgages. So what we're really trying to do with the loan store is give you that optionality that you need in a crazy yet normal market. We've all come out of 2-3 years of refi madness. And it just turned out if you could answer the phone, you could do pretty well. And I think we'd all agree that that's not the formula anymore. So I got my Ryder Cup polo on. I watched Full Swing on Netflix and they're all wearing this. So I, of course, go to Google and see if you can buy one of these still. And I got it shipped from, I don't even know where. Maybe it's not authentic, maybe it is. But I am Rydered up and we are ready to roll on this going into Augusta. So without further ado, Helm Point, most of you have heard of us. This company is a derivative of Home Point. And what that means is as we divested some servicing, some core, some consumer direct, we came down to kind of our nucleus and our top 150, 200 folks and rebranded as the Loan Store. And that's what you know us as today. But suffice to say, we've been doing this for a long time. We've done billions upon billions of dollars worth of loans, even in the last few years, let alone in our life cycle. And a lot of the folks that are here and within the company are we're kind of old hands at this. So again, to my previous points, really lean into your AEs and our platform. We're not new. We're not an upstart. And we've got a better range of products now. And that includes, as you can see, agency, of course, everybody's bread and butter. But where we really thrive, especially right now, is some of this niche product that shouldn't really be viewed as niche. And what I mean by that is non-QM. So bank statement, DSCR, versions of each. There's a lot of business out there to transact. We see every single month those locks and, of course, fundings going up. And they're going up materially. So like always, I would urge you, if you've never done one before, lean on your AE. They seem a little ominous. Prepare your borrower accordingly, right? Foreshadow, hey, there's always something unexpected in the loan process. That's why you come with me. I'm a pro. And then really lean hard on your AE. They've seen a ton of these. Don't probably need me to point this out, but when you're in that account executive role and you've got thousands of loan officers coming at you, you're aging an animal, like dog years, it's like 7 years for every one. So your AEs have probably seen hundreds of years worth of loans. I don't know if they'll appreciate me categorizing them as that, but it's the truth. They see more reps than you do. So lean on their experience. Our pricing in bank statement and DSCR is fairly phenomenal. If you go to sites like a Loan Sifter, or, we were reviewing it Monday, we were in the #1 spot. Price isn't everything, but it is a lot of it. And let's be real, as a broker, you need to offer opportunity and options for your customer. That is kind of the core statement of what you do. So if you're not looking at our options here, depending on the day, the time, the week, the loan scenario, I think you're doing yourself a disservice. There is additional volume in your world in bank statement and DSCR. In addition to that, we do have some other programs. So again, everybody knows the meat and potatoes. Everybody knows the conventional, right? That's easy. If you can't do a Fannie Freddie or Ginnie loan, you probably need to not be in the business as a lender, right? So we consider that table stakes, and where we really add value is things like this, home equity line, buy before you sell, right? Again, none of these are, in a sense, a one fit solution, right? There's no one size fits all in mortgage. But most LOs and most brokers have now realized that you have to have these 7, 8 different product categories in order to maximize your business. Constantly having things to talk with your realtor partners, and constantly understanding that, hey, if the rate and term market isn't there, I better go out and figure out what markets are. So moving on. Brenda, can you advance the slide for me, please? Yeah. So this buy before you sell product, like most things that are new and fresh, it seems difficult at first. You kind of got to read it 2 or 3 times. I know I've had to read it 3 times, but all of a sudden you get this like light bulb moment. There's truly no gotchas in it. You pay for a service like anything else. Nothing in life is free, but it really, in a supply constrained market, gives you that optionality that does unlock a couple extra deals a month. And again, remember, none of this stuff's a panacea. Together, in totality, it builds a good business. Buy before you sell, your realtors have probably heard something about it, or maybe immediately dismissed it because there's been stuff like that in the past. We feel like this is the premier product in the industry, which is why we partnered with this investor group behind it. And it's pretty simple. It allows your customer to not use the departing residence, the residence they live in today, against the ratios, right? It also allows you a firm backup offer, and in certain instances, you can get cash out to do minor improvements on the home, pay for some moving expenses, that kind of thing. We all know the opportunity to sell and immediately go in and buy the house you're looking for is pretty tough right now, right? Supplies off, demands, who knows where, rates are doing whatever rates do. Again, this is an opportunity to unlock a couple extra deals. Having your realtors understand it down to the minutia is probably not necessary. What they need to understand about it is absolutely does not replace them. It doesn't look to replace them. It really wants to add them and pursue and bolster this deal, this contract, right? Departing residents, new residents, there's a bridge loan. Again, we won't get into the exact program dynamics today, but you should know that it's a strong opportunity, and we continue to see more and more of these every month as well. Your AEs have plenty of context on it and guidance and that kind of thing. Currently, as you can see, there is a promotion as well. Our partner has offered an additional $1,500 on these deals. So a lot of opportunity to make some additional cash there. And again, it's more of an impetus to get involved and learn it. If you don't understand it, or if you've never taken the time to truly get through it, the first one is always going to have some hiccups. Let's be real. It's just like any other product, but we'll get you through it. Our underwriters know all about it. We've done a lot of these, and your AEs kind of are there to shine a flashlight into the cracks, right? They'll show you and kind of foreshadow what you should be looking out for and what they've seen in their experience closing these. So again, if this sounds interesting to you, your AE, yourself, you guys can have realtor calls, got some good coverage on the map. We're happy to partner with you in explaining this to agent groups, et cetera. Just reach out, let us know what you need on it. But it's a cool one for your toolkit. All right, moving right along, trying to make this an efficient use of our time. HELOC. People are probably tired of listening to me talk, so I'm going to hand it off to one of my buds here. Who wants to take HELOC for the crowd?
You got it, Adam. I'll jump in here. I'm Philip Schulze. I lead the sales team here at the Loan Store, and yeah, today I'll talk about HELOCs, fast closing HELOCs, and definitely that's one area that is something that I want to stress around the fast and speedy time here. It is fully automated. And when I say fully automated, there's not a human that touches this file. It is all online. It is all automated. It takes minutes for you as a loan officer to complete a few screens. It goes over to the borrower. The borrower completes, uploads income docs, uploads assets if needed, or connects accounts to the to the application, and you get an answer within minutes. Typically, answer within minutes. You agree to the terms, and you're literally going to closing within a few days. Obviously, you've got right of rescission, Texas, always unique Texas, but you still have the 12-day period in Texas in order to get home equity out of your property. But it is a standalone, first, second, third lien positions, primary, second, and investment homes. I want to stress that because we also offer this fast funding HELOC on second homes and investment properties, up to 400,000. Unlike some of the terms you'd get with a bank, we do 5, 10, 15, or 30 years. I've already kind of mentioned the fast closing piece and the fact that it's 100% online. There's no processing involved. There's no processing fee. There's really no additional work. And I think what I like to call it is a nice side hustle in our current rate environment. Mailbox money, you could also call it. It's something that for those of us who have been doing HELOCs and doing mortgages for the last 20 or 30 years, we're sitting on probably a good fat book of business that you have folks in your book that aren't going to touch a 3.5% or 4.5% interest rate. And so, but they still need cash. They need cash for home improvements. They need cash for weddings, education, things like that, paying off credit card debts. There's a myriad of things why folks need cash, but they flat out are not going to touch a 3.5% or 4.5% interest rate on their first mortgage. So pretty easy. And really the icing on the cake here is we pay 200 basis points comp to the loan officer for the HELOC. So we pay more than any other wholesaler out there today, and again, it is pretty fast process. You get in a rhythm. It is one. We've got LOs that are doing 8 to 10 to 15 of these a month. It doesn't take a lot of extra time on their part. It is something that, again, you get in that rhythm. You get, you send out, 20 or 30, kind of inquiries and getting your book of business interested in the product. And then again, it's mailbox money and certainly an additive that you can provide your customers and keep connected with your book of business. Next slide, please. And here's the coverage map. Coverage, pretty good coverage, as Adam said earlier, with buy before you sell. Same here, and we definitely have you covered there. But a little tie-in with HELOCs. So a little promotion we're doing right now is the more HELOCs you do, the more consumer rewards points that you can accumulate to apply to your first mortgage business. You can use it for price enhancements, price incentives, up to 40 bips on a loan. You can use it for an underwriting or a closing rush to improve turn times. You can use it to reduce the admin fee. Also apply it to cost of appraisal or extensions if needed. But pretty self-explanatory, but basically the more HELOCs you fund in a month, the more consumer rewards points you accumulate. And today it's dollar for dollar. So, you'd be able to apply, a 750, credit, if you will, towards an admin fee, if you close three HELOCs. So, pretty good program. Definitely something that we're getting a lot of traction on since we rolled it out in Q4 last year, and we're seeing a lot of good activity around HELOCs. And I think with that, I will turn it over to Jeremy.
Thanks, Philip. My name's Jeremy DeRosa. I'm the sales leader in the West, supporting all the AEs in the West Coast. Soft approach to hard money. So one of the surprises that was a pleasant surprise when we got to the loan store was that we also own a hard money lender. Old North Capital Fund is the name. There are 4 products that are offered. It's only in a select few states. Yeah, you can see here, offer fix and flip, new construction. There's a traditional bridge loan separate from the buy before you sell bridge loan, and a transactional program as well too. Fix and flip is by far the most prominent and popular product. Lined up to 90% acquisition value, 100% of rehab costs, up to 75% after repair value. You make 1%. We charge 2 to 3 points, traditional, 12, 14%, 6-month terms, closes in an LLC. What's kind of unique though is that it's really a referral, right? You're not the originator on the loan. So you refer your investor partner. We take a look at their project. If it gets approved and goes through, you make 1%. You don't need to be licensed in the state. You just need to be in one of the eligible states listed at the bottom of the slide there. That's where the programs are available. You'll see that they're all the non-judicial foreclosure states. What am I forgetting? The annuity aspect of this program is what makes it so appealing, and why it's kind of catching a little bit of fire for hard money. And so that is, you have an investor relationship, you bring that relationship to Old North, the transaction takes place, you go back to working on 30-year fixed, that investor, unbeknownst to you, goes back to Old North, does another deal, you still get paid, right? Once it's assigned to you, that's obviously your client, you make commission on it, even if you didn't bring back for the second, third, fifth transaction, whatever the case may be. So pretty advantageous to build a book of business there. And the coming soon state is California. We're working on getting California up and rolling, but it's in the states listed below. I think I'm going to flip it back to you, Mr. Wagner, in your polo shirt.
Why not? One of the coolest things about the Old North Private Money Fund is it's our own decisions. Like Jeremy said, we are it. We run the fund. It's our money. It's asset based. So there's no FICO. There's no reserves. There's no income. We lend on the asset itself. So the property, very unique in the space, super low doc, virtually none. And again, this isn't meant to be a wholly immersive guideline experience. This is more of a top level, but your AEs are very well versed on this. And if they don't know, they know where to go. So again, remember, they've seen tens, if not hundreds of these. Hard money, like buy before you sell, not a one size fits all, right? Sometimes we're the best option for you. Sometimes we're not, but we're always happy to look at a scenario, right? So use us, throw the address over, give kind of a brief synopsis of what your investor's looking to do, and we can provide you some guidance. We got some great folks over there that are very hands-on with all of it. So I see something in the chat I can just address real quick. Florida, sure like to, yeah. So can't give you a date, but do like the Sunshine State, as it were. So again, to recap, and kind of take any questions in the chat if you guys want to throw them in there. We want to get you out and selling loans today, but you really need to consider the loan store as one of your top 2, top 3 lenders. I think we've shown that we've got a lot of product differentiation. HELOC is such a compelling offer for the right customer at the right time. And again, we've got months worth of what we call mastermind events that we invite top producing LOs from local markets to kind of share what's working for them and what's not. What continuously surfaces from those is a theme that I don't exactly know what my customers want, but I just need to get in front of them. And if you do that old-fashioned approach to marketing, to your customers, to your realtors, I wouldn't go in guns blazing. I'd ask them, what are they thinking? What do they want? Most consumers are hell-bent on the fact that their 2 or 3% rate is going to stick with them until they die. That's fine. If you don't know blended rate or aren't familiar with running a blended rate calculation, I would urge you to educate yourself or talk to your AEs. We've done a lot of math on the prevailing home, transaction prices, the average loan balances, and then of course the HELOC. And that blended rate instantaneously goes into the 5s in most scenarios. Meaning you have a 2 or 3% first lien. Okay, don't touch it. Come in, get your HELOC on top, easy access to cash. You're paying off credit cards, car notes, you're doing remodeling, you're doing some version of needing cash at the lowest cost. This is that lowest cost perspective. When you consider the plight of most Americans, their access to actual cash, although higher than it's ever been, is usually credit cards. Also highest levels they've ever been, right? So we're coming to this weird, crossing of high debt, high equity, higher than normal cash in their checking and savings accounts that really is going to need to be solved. Is that today? Maybe, maybe not. Depends on the borrower, right? Divorce, family events, death, that kind of thing have a funny way of expediting a timeline. But the most important thing I can tell you is get in front of your customers today and make sure they understand that anything financial, they need to come to you. You're their financial Sherpa up this mountain, if you will. I know that's a little ridiculous, but hey, got to make sure you're still listening out there. So being able to have those quality conversations and not be a one-trick pony is incredibly important. You don't go to your realtors or your customers and be like, well, we can't rate and term you. You're in a low rate, so I guess check you out when rates come down again. No, it's about having a full breadth of product options to really kind of go into what they're doing. Hey, old-fashioned credit review. What are you looking at? What are you trying to spend money on? What's on your horizon for the next 6 to 12 months? Again, if I was a betting man, I would have said we've already seen some rate cuts. Clearly, we're not. We're basically in May. These months have a funny way of flying by, and you got no cuts in sight necessarily. You got a hot CPI today. Again, none of us are economists, so you have to do the best with what you've got. And we really strive to provide that menu of options that you can actually earn additional business with. Don't be shy, get out there and sell it. Your AEs have your back. They're going to put deals together. They're going to make things work for you. We're in virtually every state that we want to be. I don't know what's wrong with Vermont and the maple syrup out there, but apparently we're just not there yet. And also my apologies to the good people of Rhode Island. So other than that, we've got really strong coverage and really lean into this relationship. We're not asking for a blood oath. We're not asking to be your one and only. We want to be part of your lending arsenal, and we want to earn it, quite frankly. And I think you've seen now we've got the pedigree. We're not new. We're a new brand. We're a new label, and we have ungodly amounts of experience. So put us to the test. Give us a shot. With that, I will sign off. But parting thoughts from Schulze and DeRosa, please, guys.
Yeah, great work, Adam and Jeremy, for sure. I would just stress the experience. Adam hit on it a bunch. I will hit on it a bunch. Our AEs are the best in the business. I think you hear that a lot, but we've got the tenure, the experience, running every scenario you can possibly imagine under our belt from 20, 30 plus years in the business from an AE standpoint. That also goes in line with our underwriters, closers, even our ops and support teams as well. Many years of experience. They've got experience structuring deals that, frankly, other companies struggle with because they don't have that breadth of experience. So give us a shot. We'll put it. We'll show you and definitely give an opportunity to earn your business. And I'm good. Jeremy, anything on your end?
Yeah, I'll just throw in thank you, first of all, for anyone that joined today. Really appreciate you taking the time and spending it with us. When you do check us out, I think you'll learn that we're super nice people with a positive attitude at all times. We love supporting mortgage brokers and their clients. And so, please give us a whirl. Love it. Thank you.
Thanks, everybody. Let's go ahead
Thank
and
you.
get some loans.